What's going on, everybody? I'm your average investor, and this is Financial Academics. Welcome to our second episode on the channel. In today's video, we're taking a look at the heated feud between Tesla bears and bulls, specifically the now infamous Tesla bear Gordon Johnson, and one of YouTube's most successful Tesla evangelists, Rob Maurer. But before we dig in, early likes on the video are much appreciated. So if you could do the channel a favor and avoid even the most compelling temptation to smash the thumbs up button, and instead we prefer a delicate caress, as it will help the channel get off the ground in a major way. So I'm going to pretend that you've done that now, and thank you for supporting the channel. Let's get into it. In this first clip, Rob and Gordon debate the merits of each other's case. As a disclaimer, you'll have to mind the frequent interruptions of Gordon Johnson. They are bold and rapid. He seems to struggle to wait his turn. In the clip, Gordon poses the argument that Tesla's a busted growth story because the company is, and I quote, losing market share in Europe, and that the erosion in market share is due to mounting competition for Tesla in Europe. Rob Maurer educates Gordon. The insightful fact of the matter is, when measuring Tesla's vehicle delivery growth quarter over quarter, you have to look at the global sales, not just cherry pick one market.
You see what happened in Europe, right? Before there was competition, Tesla dominated. Competition came in, their market share went from 33% to single digits. So the question is, what's going to happen globally as all these cars start to span out globally? I think you're going to see a similar dynamic. And I think to focus on the numbers, not this, trying to cherry pick positive data points.
I'm only talking about regulatory credits because you brought up regulatory credits.
Their revenues peaked. What's that? I'm sorry?
I'm only talking about the regulatory credits because you brought up the regulatory credits, so I'm just trying to clarify the situation of the credits. That was
The credits are one-time in nature based on Tesla's own disclosure. The reason why auto companies buy credits from Tesla is because they didn't make EVs. Every auto company is making an EV. So that 100% revenue stream is going to dry up for them going forward. They're trying to tell you it's one time, and it is.
Yeah, and that's fine. I'm not going to argue that regulatory credits are going to exist forever. That's, no one's buying Tesla stock
so
because
without
of that.
regulatory credits, over the past 32 quarters, and only 4 quarters has Tesla been profitable, the most recent of which was the third quarter of 2019. So if they don't make money without selling credits, how can you be so optimistic on a company that's business just perpetually burns cash? When you don't even have competition yet, right? Competition is coming. I just don't see how this matches up.
Well, competition has been coming for a decade now. I mean, the Chevy Bolt
but it just arrived,
beat the Model 3 to market, and that was sort of the death knell of Tesla at the time.
Well, no. So what happened? No, you got that wrong. So
I gotta stop it right there and just applaud my man Rob Maurer. Wow, look at how he's keeping his composure while Gordon Johnson is just talking out his arse. I don't know how he does it. Rob, my hat's off to you.
So what happened is in Europe, right? If you sold an EV car in Europe last year, you didn't get any credits towards your mandated EV sales. Only in 2020, if you sold EVs in Europe, did you get to take credits against, basically the mandates. So what happened is everybody slowed down. They didn't sell a lot of EVs, and now everybody in Europe, because it's government mandated, they're selling EVs. When that happened, right, Tesla's market share literally imploded. This isn't debatable. This is fact, right? So now you have GM coming in the U.S. with 12 cars. Ford is coming. Porsche is coming. VW is coming. So what's going to happen here when you have choices, right? Tesla's not the only option. I mean, we saw what happened.
What about
in
the United States market? You seem very heavily focused on Europe. Tesla has gained share in the United States. Their market share of electric vehicles, if we want to not talk about internal combustion engine vehicles, which I don't think is valid, but if we just want to talk about EVs, Tesla's market share has held steady at 80%. Even though, as you noted earlier,
we don't have that data. They stopped reporting that data to Inside EVs, so we really don't know what their market share is.
Well, they never reported it to Inside EVs.
I would argue that
these are all estimates.
There haven't been any real EVs in the U.S. That's happening now, right? In 2021, you're going to have 12 new EVs from General Motors. Ford is launching the Mach-E, which is oversubscribed, and dealers are selling it for $15,000 above MSRP because there's such high demand. VW is about to ship the first ID3 and ID4. The Volvo Polestar just hit, right? Car and Driver says before you buy a Model 3, or a Model Y, you got to drive this car. It's better, right? So my point is, like, you haven't had competition in the U.S. It's coming, right? We're going to see it.
What about the Chevy Bolt? What about the Jaguar
year.
I-Pace? What about the Porsche Taycan? Tesla has had competition in the United States, and they've been at a $7,500 disadvantage against that competition, and yet they continue to outsell it.
Those are highly expensive luxury cars, right? And
the Chevy
Porsche
Bolt
hasn't shipped a lot of Taycans. Porsche hasn't shipped a lot of Taycans to the U.S. Look, when you say, the real competition for Tesla is the Polestar. It's the ID3, the ID4. It's the Mercedes EQC. It's the BMW EV that's coming. It's the Mach-E. You can't buy those yet in the United States, but you will, right, in the fourth quarter of next year. So we'll see what happens. We saw what happened in Europe. It's not that I'm just focused on Europe. It's just Europe is the only market where we've had real competition and there's real market share data, right? Where's the U.S. market share data? Tesla stopped reporting those monthly numbers to Inside EVs. So we don't really know what the market share is.
Well, you say we know China and we know Europe. So if we know those two, we can factor out and get the United States. It's not that difficult. We have to estimate, of course, but we still have round numbers.
No disrespect, but that's ridiculous, right? You'd have to know the sales of those cars, not just Tesla cars, but every single car in each market. And then you'd have to do back into those numbers. That is not easy to do. It's not something you can do. You can't say, Tesla sells this, and you can do that for Tesla, but to get market share, you need it for every car that sells in the market. We don't have that data for the U.S. So to say that,
if you can estimate it for Tesla, you can estimate it for anybody else.
To say they've maintained their hold on, I'm sorry, what was that?
If you can estimate Tesla from extracting total global sales from subtract Europe, subtract China, get the U.S., you can do the same process for any other automaker.
I'm saying you can estimate Tesla's U.S. sales. You can't estimate everybody else's U.S. EV sales without that data, right? And we don't have that.
But it's the same data. It's the same data. The same process you would use to estimate Tesla's sales is the same you would use to estimate any other automaker. It's the same reporting.
Bravo once again, Rob. Nicely done. Using grade 5 level math, you upended Gordon Johnson, an established Wall Street analyst's point.
Right. So, look, we don't have to talk in circles here. Where is the data that shows their market share has been the same this year? Right? Where is that data? Or is that just a statistic you're throwing out there? What's that?
I can send you links afterward. I don't have it handy, but it's from carsalesbase.com. There are other sites that track this stuff. But all you need to look at is the total sales for the quarter. And, it sounds like you don't want to look at that data because it includes internal combustion engine vehicles. So we can't necessarily, I don't have the data for just electric vehicles right in front of me. But Tesla's sales were much better than other automakers for the quarter, even though they had less inventory heading into it.
We don't have to belabor this. I don't know what Tesla's market share is in the U.S. I don't think that's important right now because, again, there's not a lot of EVs being sold in the U.S. that compete with Tesla. To compare a $40,000 Model 3 to a $120,000 Porsche Taycan, I think those are two different geographies.
They're completely different. But I also mentioned the Chevy Bolt, which starts at $37,000.
Let me say this. So for you to say that the I-Pace and the Jaguar have the I-Pace and the Taycan have been here, those aren't comparable, right? The comparable cars will be the Polestar, it will be the ID3 and the ID4, it will be the EQC, it'll be the Mach-E. Those will be the comparable cars, and those cars haven't launched yet. So Tesla hasn't had competition in the U.S. Despite that fact, their U.S. revenues peaked in the fourth quarter of 2018. So what do you think happens when competition? Peaked. Their U.S. revenue. Their U.S. revenue. Their revenue in the United States peaked in the fourth quarter of 2018. Global revenues essentially peaked in the fourth quarter.
You're forecasting for $9.7 billion in revenue in Q4. I don't understand how you can forecast for 32% more revenue from Tesla versus their best quarter ever, and then say that growth has peaked.
Well, it's quite easy, right? They have a whole nother facility that's producing 220 to 230,000 cars, peaked. And they have a new model. So they should be seeing growth. Their growth theoretically should almost be double, right? And the bulk of our revenue, not the bulk, a big percentage of our revenue are one-time credit sales in the fourth quarter.
Well, less than 10%.
And one-time FSD attach rates have declined significantly given the past two price hikes they've done. So to say that you don't understand, listen, they have another facility, right? So they're going to sell more cars. So that's why we're projecting more growth. But for this
then you can't say that the growth story is over if Tesla's going to sell more cars. Those are incompatible statements. It doesn't matter if they have an extra facility.
Based on the numbers they've reported thus far, the growth story is over, right? The revenue's peaked.
Sure, thus far.
Right? This is a
but
fact.
You yourself
are
forecasting for growth.
My projections are just that. They're my projections. Hold on, but my projections are just that. They're my projections. And I'm assuming price cuts, right? I'm assuming Tesla's going to have to cut the prices of its cars to get to my numbers. I said that in the note. If you look at what they've reported thus far, it's a fact that it's a busted growth story. Their growth peaked quarters ago. You can't argue that. That's a fact, right? Their revenues in the first and second quarter of this year were less than they were in the fourth quarter of 2018. Their revenues in the U.S. peaked in the fourth quarter. This is just factual. So,
it's factual historically, but it's not factual going forward, even by your own forecast.
Well, no, the growth we have in our forecast, again, is based on them having a whole nother facility and a new car, right? With a whole nother plant, right? They had one plant, now they have two, right? Theoretically, they should be selling double the cars. They had 3 models, now they have 4 models, right? The Model Y. They should be selling a lot more cars if you're saying that there's unlimited demand. And they're not. If you look at our auto revenues, they're not growing significantly.
But you're guiding for them to sell a lot more cars. You're guiding for 177,000 sales in Q4 versus an all-time high of 112,000. They are selling a lot more cars, even by your own forecast.
Oh, lovely. This has to go down as one of the most poorly expressed contradictions. Back in late Q2, Gordon published his estimate of $9.7 billion in the fourth quarter of 2020, which is a 32% increase over that quarter. How can he even keep a straight face?
It doesn't matter if they have an extra facility.
Right.
They're still selling those cars.
Right, but those car sales are being achieved via cost cuts and deep losses in their core business.
That's the whole goal of Tesla.
Again, you can't just look at a company's revenues when they're losing money at doing what they do. Again, if you and I had a lemonade stand and we gave the lemonade away for free, we could sell unlimited, infinite amounts of lemonade, but we would be out of business. Without capital raises, if you're in a business that perpetually loses money, which Tesla is, you're not going to make it.
Tesla has not perpetually lost money. Up until the last couple of years,
over the
Tesla
past
has
32
lost.
quarters, over the past 32
Sure.
quarters, in only 4 of those quarters, excluding credit sales, have they been profitable. That's a fact.
Would you agree that it's more expensive from a profitability perspective when you're growing a business rapidly versus when you're not?
They've been around 17 years, so you can't keep treating them as if they just IPO'd yesterday.
Well, they've been still growing like they IPO'd
years. They've
yesterday.
been around longer than Facebook, right?
The point is that it costs. The point is that it's costly from a profitability perspective to grow.
Are they just going to perpetually be able to lose money, and the excuse is going to be, oh, they're growing? I mean, come on, you got to make money in your business.
Do you agree that it is more expensive for a business to grow?
People take this stuff personally. This isn't personal. This is just factual, right? There's no need to take this personally.
Are you finding it hard not to laugh? It gets better. In this next clip, Gordon again reveals the source for his indifference and abysmal perspective on Tesla analysis. The facets of the business that present themselves so logically, yet Gordon manages to misinterpret them altogether. This point is so perfectly fielded by Rob. And in the middle of supplying his thesis, Gordon senses pain is coming. There's even a point where you can see he's realizing that his point is being tossed in the bin. Let's watch.
It's happened that the margins are going to decline. If we look at Tesla, that's what they've done throughout their entire history. They've lowered the prices of their cars, and their gross margin has remained relatively stable.
Right, but hold on. To that point of gross margin remaining stable, you got to look at their services and other division, right? So for pretty much every other car company, your services and other is your highest gross margin division, because effectively the costs are extremely low. So when somebody takes their car in to be serviced, you're making a killing there. Their gross margins in services and other are decisively negative, right? So again, we believe that they're taking a lot of costs associated with, service and other items associated with the selling of their vehicles and pulling those into service and other. So it makes their automotive gross margin look a lot better than it actually is. So if you can explain to me why everybody else's services and other gross margin is 50% and Tesla's it's not roughly 50%, and everybody else in Tesla's is grossly negative, then I'll agree that their gross margins have been robust. But as of right now, I do not agree with that. And there are court cases and lawsuits currently pending where the lawsuits allege that Tesla has taken warranty and reclassified it as goodwill, thus taking it out of essentially their cost of goods sold. That inflates their gross margin, and yet nobody talks about this, even though there's literally lawsuits that have been filed. So again, I don't think their gross margin is as it appears, and I'd like the company to explain how their services and other gross margin is always significantly in the red. And
yeah,
again,
I think Tesla has talked about that. Let's stick on that point. I think Tesla has talked about that. One of the challenges with being an upstart automaker is that when you start selling vehicles,
but they're not an upstart automaker. That's another mistruth, right? This company's been around.
Regardless of that,
decades.
let's stick on the point. So I think I think
Yeah.
as a newer automaker, I think you could agree with that. You know, Tesla's been in business 17 years. A company like Ford has been in business over 100 years. So Tesla is relatively newer. And it's certainly, if you look at the scale, Tesla's grown deliveries 50% per year every year. So they're roughly doubling their fleet every year and a half or 2 years. So they are growing more significantly than a normal automaker. That presents unique challenges for them and their business model. So one of those challenges is that the majority of their vehicles at any point in time, because of that rapid growth, are under warranty because they're within the first 4 years of ownership. That is not the case for a company that's been in business for 100 years that hasn't grown, significantly for the last couple of decades. Most of their fleet is already out of warranty, so that's why they're able to collect significant margins from service. I would also point out that internal combustion engine vehicles in general require more service.
Hold on, what does that have to do? Hold on, if they're out of warranty, what does that have to do with significant margins from service? How are those two even? I'm sorry, how are those two related?
If a vehicle is in warranty, Tesla needs to cover the costs of that service. They're not generating revenue and profit off of that. Versus other automakers servicing out of warranty vehicles are then able to collect those margins, those significant margins on that business.
Here again, Rob manages to articulate the argument so perfectly, yet somehow it manages to sail right over Gordon Johnson's head. Of course, Tesla service is not going to be a high operating margin department until such a point that there are a similar percentage of Tesla vehicles out on the road that are out of warranty. Today, Toyota, Ford, Honda, Volkswagen, they're going to have a disproportionately high percentage of vehicles requiring service and being out of warranty, thus earning those service departments higher margins. Over the course of the next 2 to 3, 4 years, Tesla will see a slow rise in their service margins.
Right, or maybe the opposite explanation is, Tesla's cars have significantly more issues, but we don't even have to go there. This is
I don't think that's
an accounting
accurate.
point. But okay. So what? But one thing you asked me, you said, how can I be guiding to or projecting significant revenues and saying it's a busted growth story? I'm just looking at the numbers historically, right? Historically, their revenues peaked in essentially the fourth quarter of 2018. Their margins peaked in the third quarter of 2018. No one can refute that. That's a fact, right?
Well, it's not entirely factual. They did have a quarter higher than that since then.
Right. I said essentially. It was modestly higher, maybe like 200 million. But I think that was the fourth quarter of 2019. But in both the first and second quarter, their revenues are below the fourth quarter of 2018.
So
and their U.S. revenues did peak in the fourth quarter of 2018. There has been no quarter where the U.S. revenues have been higher. Keep in mind, this is despite the fact that they have another facility in Shanghai and another model in the Model Y, and yet they're not selling on a revenue basis. They're doing less than what they did before they had another facility, another model. I think that's a big deal. That is effectively a busted growth story, right?
Well, what about the pandemic? Tesla's had their factory shut down for 3 or 4 weeks in China. They had their factory shut down for 7 or 8 weeks in Fremont. Tesla's inventory is very low. It's 17 days of supply versus other automakers are generally around 85 days of supply. So you've got 2 weeks of vehicles on hand. If you're shut down for production for 8 weeks, that doesn't work. You can't continue to grow your revenue without producing vehicles. So how does that should be a major consideration when we're talking about Q1 and Q2.
Right. There's an easy way to look at that. Every automaker was affected by the pandemic equally.
Differently.
Right? So we look to market share. So what I do is I look to market share. So what has Tesla's market share done fourth quarter of last year to today? Right. Fourth quarter of last year in Europe, their market share was about 35%. Today, it's about 9%. So everybody was affected equally. Tesla is hemorrhaging market share. In the U.S., right, their sales are declining. In China, they're not hitting their numbers. So everybody was affected equally. So to say it's pandemic, that doesn't pass the sniff test because they're losing significant share in all of their key markets. And keep in mind, right, we haven't even seen the effects of the Mach-E in the United States. We haven't seen the effects of the ID3 or the ID4 from VW. We haven't really seen the effects of the Taycan. We haven't seen the effects of the 12 EVs that GM's launching between now and the beginning of 2021. The competition hasn't even started to arrive yet their market share is imploding. So you can argue
that's not accurate. Their market share is not imploding. If you isolate on Europe, sure, but Tesla's not going to ship a vehicle to Europe if they can sell it in the United States. It doesn't make sense. So it's not fair to look at Europe, specifically in Q1 and Q2, when there were shutdowns in the United States factory, which they used to produce vehicles for Europe, and then assume that Tesla's demand is cratering in Europe because they couldn't ship vehicles over there. To say that
Anyway, guys, I'm going to stop the drama there. Who do you guys feel won that one? Let me know in the comments. Or is that just being a little too gratuitous? I hope one day to see Gordon Johnson has either come around and smelled the aroma that Elon is cooking, or at the very least brought better arguments to the table. Okay guys, well that about does it for today. Thanks for tuning in to Financial Academics. Hope you enjoyed the video, and I'll see you next time. Peace.
Let's join, I'm on performing the journey. In all earnest, I go so burny. Takes another nigga to turn me. Get it straight, I ain't late on stakes. I'm just sternly stating how what I do with grace takes another nigga to turn mean. My returnings like Blockbuster with a tip, and I ain't kind, but I don't hit. So you starting at the end, that's the part where you begin. I skip the bullshit so we can start it where we win. Yeah, spoiler alert, I can hear you all saying, boy you're a jerk. But it's cool though, no we got a rule, yo. Get it in, then we win and do it all again, huh?
From a floating death to a fire death to a flower outside my grave. And oh man, or will you just be polite with your hand? And it really means I'm number one and you're a fan. Well that's cool, cause I think you're number one too. Yeah, that's cool, cause I think you're number one, too. Yeah, that's cool, cause I think you're number one.
Me and Words, we made a deal that I'm gon' keep them real. And they show me their secrets, I can even cop a feel. Victorious, can't match with warriors. I match with, similarly can't mix matchsticks with forests. Only you can prevent what I do. Only do can prevent what's my fuel. I match sticks with wicks. Wicker man, take a sip of liquor and spit the lid off warriors. And spitting flames, nigga did it the gang, huh?
Floating death to a fire death to a fire outside my grave. And oh man, or will you just be a polite with your hand? And it really means I'm number one and you're a fan. Well that's cool, cause I think you're number one too. Yeah, that's cool, cause I think you're number one too. Yeah, but that's for me. Yeah, I think you're number one too.
This road rage without a road cage takes courage to run on these roadways. I know you like no way, but I'm a phone race. Also every soccer Terry Fox no leg. Go ahead, don't stop. Go ahead, sitting in your car just listening to the bars. And there's traffic on the round and you feel like falling down. And the music that I'm spewing not enough to calm it down. For you know you watch your car with your briefcase walking around. And them dollars from the budget that went to S1 production. And Sebastian on the hook not being dug by Michael Douglas. So don't start that walk through Echo Park when life's a 101 and you caught up in the jam. Just show some love back to your number one fan.
From a floating death to a fire death to a fire outside my grave. And oh man, or will you just be polite with your hand? And it really means I'm number one and you're a fan. Well that's cool, cause I think you're number one too.
I love you too.
Yeah, that's cool, cause I think you're number one too. Yeah, but that's for me. Yeah, I think you're number one too.